Morning to everybody, those who have joined here for the discussion of market outlook for the date of 18th August 2026. We need to show some important proofs against the behavioral research and based on its outcome, how it has been described, how it has respected our forecast, only in the way of simply analyzing the previous session's behavior and how we have been tracking those behavioral outcomes by the way of plotting a simple, like already shown, like a rectangular boxes inside which how it has acted after breaking down and closing below to that important dates low or the rectangular boxes low or bottom, how it has been acting. That and all can be now compared and discussed based on the chart we are going to display now. Just a minute. I'll be displaying the Nifty chart. See, you can easily identify the things how we have been discussing based on this rectangular box we have drawn. So the possibility where it can be like those who have been continuously observing and following and applying the behavior-based research outcome in your trading strategies, as your trading strategies. That can be now easily understood. See, the chances of making further low has been confirmed by the Nifty. Since we have already demonstrated that the 24,100 to 24,000 zone probably getting breached out with an intention to cover this or fill this gap already created. Whenever the gap in the way of upside or downside generated on charts as per the even physical law, every action equal to reactions there. Like that, you can also compare these gaps every time which is happening on the chart, whether it is index-based one or a stock-based one. That gap will be having a reaction of getting filled, whether it is sooner or later, it will be happening. So in that manner, the gap is getting filled with an intention to continue the downward bias or the weak consolidation based downward drifting behavior would be expected to continue since the market already closed below 24,300. This is what the second example based on the swings high or swings low or any important dates high or low, we are actually taking into consideration for measuring the upcoming session's behavior. In that manner, the July 8th low and high what we have taken already, that was 24,300 and 24,000. Yes, here it is. So the July 8th high and low which was acted already and which has started acting second time after forming a new swing. So the 24,300, when the market closes above to that point, this is what the proof you can see, how the attempts have been made. Until it is closing above this point, you can see whether it has made any attempts, even though it has closed one day, whether it has continued the uptrend, because it has not continuously closed above this particular mark second day. So it could not move further up. So it have fallen back, absorbed the sell buying, and then pushed the prices up based on the consecutive 2 sessions close, which was happened here only. So after that, the consecutive 2 sessions where it has recorded on chart, the market have now been drifting downward and given a confirmation based on this particular box and the high and low of August 3 and 4th 1. So based on that, the market consecutively 2 sessions closed with a candle of indecisiveness. So below to that indecisive candle or above to that particular candle, if closes and all on daily frame is particularly happening, you can see the upcoming sessions will be continuing on the same trend where it is providing or making confirmation. In that manner, if you can see the 24,296 was the low point of that particular indecisive candle. And then the yesterday's close happened 24,000, slightly lower than the previous indecisive candle's low. So 24,287. So this and all enough to understand how the trend will be continuing. So without, there is no choice for Nifty. It should come down towards 24,100 as the recent gap up based swings lower level of 24,136. So 24,100 is probably expected. And then as long as it is trading below to this particular candle's low, the 14th of August, that was also made on Friday. So the Friday's low, as long as the Nifty is actually holding as the resistance point, you can see continuously the downward attempts and all making to reach 24,000, and even it may be trying to enter into the 23,000 zone, that is 23,900 or 800 as the 8th July's low that was made 23,800 like. So this much of possibilities one can have, and one can actually create positions based on the confirmation already the markets provided, and it is yet to confirm about the positional based setups based on the bullish attempts which are already taken. So which has not yet comfortably taken a chance to build a long based or bullish based movements. So that as described, the 23,700 as the interim behavior shift zone and 24,700 as a core behavior shift zone. That and all actually making the or allowing the Nifty to form the bigger swings between this 1,000 point. So in that manner only we have already many times described and explained the things. That is what happening here. Anyhow, this is not necessary at all the times it has to reach 23,700 zone and pick the volume and moving up like. It may even slightly forming the higher low when compared to 23,700, it may form the 23,800 or 900 or even 24,000. Also, we can see the bottom may get formed from where one can see the new swings may get created from that zone 24,000. So why we are insisting this point means this 24,000 itself you have to be aware building positional based long from here on. Do not wait till it is moving below 24,000. Do not expect every time the 23,700 it has to reach and observe the volume like. Based on the recent behavior, it has not interestingly moved towards 3,700. It has tried to, it has attempted to observe volume between 23,900 and 23,800. So this 23,900 and 23,800 itself, you can observe that an important support zone have been already created like it. So that's the way one can approach and change the stance in the market's behavior. So that is what the thing we want to share with you. So around 24,000, if you are seeing the markets are not interested to go below this point, you can get the signal or you can get the sense about the markets probably getting a sharp with a sharp bounce or even without sharp bounce, the probability will be higher for reversing towards the previous swings high. The previous swings high and all 24,774. Look like the 700 points, even it is giving back all the unattempted points with a gap up and all. You can just take the 500 points, around 2% of upside one can enjoy if you are clearly watching this kind of observations. We have been putting effort to make you all understand. And through that long build-ups in the way of investing or in the way of taking positions on the trading side, you can probably get the chance of enjoying 200 points or 500 points of gain, 2% of markets high. That means a positive side you can expect. So that's the thing. So be alert and be cautious, particularly for those who want to continue these short positions or put options you bought. That would be a great chance to cover or to reduce when the market nears this 24,000 as. This time it is going to act as not only the psychological support, also the interim core support, this 24,000. So it would be better to observe and act accordingly. That's the thing we want to share with you all in the way of showing the Nifty chart. So we can now discuss about the rest of the parts in the pre-market outlook report. So the downside confirmation strengthens further, but 24,000 holds the key was the phrase we have mentioned in today's video. We can observe the things what we have mentioned clearly. So this is going to be yet another opening with a cautious note. Even though the trends and all with a neutral and a mixer manner shown across the regions of Asia, US and Europe, we are actually in the way of continuing the behavioral effect that is going to continue the weak consolidation within the range of, within particularly a thin range of 24,200 and 24,400 for few hours at least. As long as the Nifty is trading between this particular zone, 24,200 and 24,400, it is better, we are advising, do not venture with aggressive position building, whether it is a short or long. Do not venture with it. In case if you are seeing within first 1 hour, if the Nifty is breaking down 24,200, you can start building the short positions or buying put options like or even selling call options. There you can see the chance for reaching sharply and quickly the 24,100 would be there. You can see on the chart in today's or tomorrow's sessions. And in case this is having very rare chance, but anyway, we are giving an explanation about what it may happen once it breaks the resistance of today's one mentioned as 24,400. There is less chance, but anyway, you can see that 24,500 attempt may be taken by the Nifty. That's the thing. So there is no further deepening explanation is needed for positional setters as already discussed. So traders can cautiously approach the market, particularly between 24,200 and 400. Day traders may avoid participating on index-oriented things if you are a safe trader. Only based on the risk appetite attitude, that means one can say that Nifty's positions or any other sector or stocks positions may be taken out. On sector front, today many sectors, which includes the core ones like realty, the attempt taken by the realty index yesterday is encouraging some more extension of the buying attempts. We can see, particularly as we have described yesterday, the mid cap and small cap oriented stocks would be functioning well, like that has happened yesterday. That has predicted, it has respected our forecast on mid cap and small cap. So that may be continuing today with the support of real estate and some stocks under metals and major stocks under IT. Also, the major stocks, major number of stocks under capital goods also expected to participate well. A selective stocks from FMCG and pharma can be focused in the way of building long, and along with it, oil and gas also can be in focus. Particularly, the OMCs may get a hit. Stocks wise, one can focus based on news. Here we have listed along with the technical behavioral outcome based one also. That includes Oberoi Realty, Voltas, BSE, Godrej Properties, Jyoti CNC Automation, Manipal Health Enterprises, or the number of stocks one can focus for the day trading opportunities. So keeping stop loss particularly in this kind of non-directional and very thin consolidative phase the markets are maintaining, it is very must for stop loss maintenance on all transactions. We can see some queries have fallen that has been now. So the Ashok Leyland is the query again as well. So that can be now seen to the way of sharing the chart. See, as we have yesterday described through the way of showing the Ashok Leyland chart, it has somewhat respected because the bounce what happened was we can treat it as a fake buying activity. But in case if it again breaks down this particular days, so this particular day's low means the 14th of, that means last Friday's low of 170 roundly you can take, or 169.7 exactly although you can take. In case if it breaks this low, you can see as like the Nifty we have explained, this particular gap also may easily get filled down. So the possibility is very high for attracting selling as long as the Nifty is trading below this 183 as an immediate resistance point. Every rise should be utilized as a selling opportunity, not for building long. So if you are having any positions on the long side or a long build-up you have made, means you can keep this as a very clear resistance path until it is holding below this resistance of 183. The stock may be continuously attracting selling on every rise and trying to fill this gap, and even below to this point around 160 also can be expected. For that 160 not having any confirmation as of now, you can actually try to understand with the gap filling manner the levels and all should be expected now. So that only you can observe. Another query. Yes, this is again an encouraging feedback from Mr. Ravi sir, that well explained. There are two gaps to be filled. Yeah, of course. The first one was 24,041 explained and 23,823. But we should start buying once the market reaches 24,000. Super, sir. Really good observation in was one. Chances are very high for 24,000 as today is the Nifty option weekly. Yes, of course. You are tracking the market in well observed manner, sir. Probably in this kind of observation and acting will be making yes, traders successfully approaching the market and gaining too. So if time allows, please comment on the first cry with short-term target. Yeah, of course, sir. It's our duty to respect your queries. So the first cry, we can now see how it is going to act for the day and even for the near term. See, as it has been strongly consolidating without having any small chance even to break the structure. So the probability will be very high. You can see that through this consolidation, it may be witnessing a sharp bounce now and then, but that sharp bounces and all truly for attracting selling, not for breaking the structure, which has not happened yet. So it can be treated in that manner only. So the first cry as the share may be giving a chance to bounce towards the zone of 210 or 212 maximum that this particular days, the 14th August high 222, it has already witnessed. It is very difficult for the stock to reach this 222 as the previous swings high. This is the only thing you can get clarity about the stock's price actions. So until it is trading between this Friday's high and low, every rise can be utilized based on the behavioral outcome it has already witnesses. So one can utilize every rise to reduce positions, not to build the long. When you can build a long means, it is of course at least this particular zone. That means this particular high, the 237.95, around the 238, you can say. So after this particular character changing, so change of character is required here. So that particular things won't happen. Where onwards you can build the long positions with confidence, clarity. What it may give for the short side means, you can see the trend would be consolidating with an intention to attract huge buying volume around 200 as a psychological support. It is more important for stocks than the index whenever the psychological supports are approached. So there you can see an investment based approach may be tried, or otherwise trading setups and all may be awaited. So you can wait and watch till it is reaching 200 as the support, then you can take a decision whether it is giving a sharp upside around that zone or not. So that's for first trade. Cupid delivery, wait or sell yesterday down. Yeah, yesterday's Cupid actions and all based on the technical behavior, particularly based on the profit booking activities. So you can further involve in the accumulation or fresh entry of the Cupid. So if you want to do so, you can see the Cupid shares probably getting a chance of, even yesterday itself it has smartly reversed, and today it is moving comfortably with a bounce backing activities. So you can even participate at the current levels. Yesterday's low became a very strong support point hereafter. So as long as the yesterday's support is being held positionally or even for the day, you can concentrate on building long positions on Cupid. The target probably around this particular Fibonacci level of 287, the first target one can have. In case if it is trying to witness any downward drift, which may be an opportunity for building long, as long as it is holding this yesterday's lower support. That's the thing. So we have addressed all the queries as of now. So we can now conclude since the market has opened already. Thank you for your participation. We'll be meeting again tomorrow. Wishing everyone to have an opportunistic trade today since the market already reached the bottom zone. Thank you. Bye-bye.